morning, dear teachers and classmates. I'm Jingyi. Before start, let me introduce other team members to you. Anastasia, Wen, Lu Ning, and Yan. We are pleased to be here to talk about the role of long sales in credit risk transfer. Our presentation is about 10 minutes. At the end of the presentation, we are happy to answer any questions from you. Our presentation is divided into 7 parts. At the beginning, I will talk about the methods in credit risk transfer. Then we will look into loan sales and why bank sells loan. Also, we will compare the loan sales with CDS and CDO. In addition, actually there are some disadvantages of loan sales. At the end of the presentation, we will talk about factors stimulating the growth of loan sales and its own limitations. At the beginning, I will talk about the reasons why we choose this issue. Nowadays, people pay more attention to credit risk transfer. There are 3 methods in it: credit derivatives, long sales, and securitization. As you can see from these 2 graphs, the trading volume of securitization in Euro market from 2013 to 2015 has been decreasing. The reason is that people became cautious about securitization. However, there is an increasing trend in loan sales. We are curious about the reasons behind this kind of phenomena. As a result, the first step is to look into loan sales and understand it. Now let's welcome Anastasia to explain the loan sales to you.
The main feature of loan sales is that they reduce credit risk by removing the loan from the balance sheet. Loans can be sold with and without recourse. In first case, a bank retains a contingent liability. However, in most cases, loans are sold without recourse and the customer bears all the credit risk. As for the types of loan sales, they can be divided into 3 groups, depending on the loan which is sold. The third group is emerging market loans. That is also about the borrowers from the less developed countries. The second and the third group are about domestic market. They are traditional short-term loans and highly leveraged transactions, which double borrower's liability and involve buyout, acquisition, and recapitalization. As just been said, nowadays loan sales tend to increase, so let's look in more details on the reasons for selling loan. First, there are some reserve requirements which increase the cost of funds in the loan portfolio. They are the incentive for bank to remove the loan from the balance sheet by selling it without recourse, and thus to shrink the amounts it has to hold. Second, loan sales increase the liquidity. They free up extra cash, which can be used for further lending. The third incentive is associated with the problem of asymmetric information on the loan sales market. Banks don't have to provide all the information about the loan. That leads to the situation when customers can buy very risky loan at higher price. Thus, the bank receives additional benefit, which is the difference between the price which was paid and the real value of the loan. The problem of asymmetric information was solved on the market of securitization. That leads us to the next slide, where we will compare loan sales with other credit risk transfer methods.
In this part, I will talk about the similarities and differences between loan sales CDS and CDO. Let's start with CDS. As banks want to transfer their risk, both the loan sales market and CDS will learn to the excessive monitor of riskier credit, which will ignore the monitor of safe credit. Because of reputation concern, although banks can transfer their risk, they will also want to monitor their loan, and the high default rate will be hurt bank's reputation. In terms of the difference, as the buyer in the CDS do not the control right, and the unobserved or CDS transaction that will underneath bank's monitoring. Next, we will compare with CDO. Because of information asymmetry, banks have the incentive to sell the underperforming loan. In secondary market, the high-quality loan will be underestimated, as the investor cannot distinguish the low-quality loan from the high-quality loan. Therefore, they will be valued a loan at the average expected value. Due to this information dilution cost, the bank have no interest to sell the high-quality loan. However, for the empirical fact, both the low-quality loan and high-quality loan can be exacted from the loan sales market, as banks want to preserve their informational advantage in future competition market, and their decision have the effort of clientele, the quality of their clientele to the potential competitors. Also, the CDO is poor. Even the sophisticated investors don't know what they are holding. However, in the long sale market, the loan is sold as single name, and the buyer can identify the borrower of the loan. Therefore, in some degree, in the long sale market, the buyer can know what they are holding and know the risk involved. However, it also has some disadvantages. Let's welcome Luning to introduce it.
Thank you, Wen. It seems that there are many merits of the long sale market. However, every coin has two sides, so therefore I'm going to talk about some disadvantages of long sales. To begin with, as you can see on the screen, online securitization, which could create various product types to meet both large and small investors' needs. Long sales target market is normally institutional investors who design a long-term income stream. So this kind of characteristics will lead to a barrier that it is hard for small investors to participate in the market. Furthermore, long sales origination requires additional cash to be funded, which means that the transaction costs of banks in the long sales might increase. And finally, the most serious drawbacks refers to the agency problem. On the one hand, for banks who rely on the relationship lending, long sales might undermine the relationship between borrowers and lenders. The reason behind this is that, according to our research, the borrower's stock price is negatively impacted by the average on the period of announcement of a loan sale. And on the other hand, the loan sales, the banks as the information producers, always have the moral hazard problem, that is, they have an incentive to sell loans, which is likely to perform poorly. Despite these advantages, the market is continuing to grow. Now let's welcome Yan to talk about some external factors impacting the market.
At the end of presentation, I would like to speak about factors stimulating loan sales market to growth and oppositely about limitations that also affecting this kind of market. So one of the most important features is linked with the nature of loan sales. The ability of bank to remove a loan from the bank's balance sheet. That means that financial institutions don't need to keep extra amount of reserve according to Basel III requirement. The second factor is linked with increasing standardization of loan documentation, which also attracts additionally investors to participate in loan sales market. Third point is linked with credit rating of loans. As more loans are credit rated, their attractiveness for secondary market buyers are also improving. Also, there is an increasing trend of troubled loan sales and purchase by foreign financial institutions. And finally, there is also an increase of troubled loan sales by governmental financial institutions, for example, Federal Deposit Insurance Corporation, which is selling loans of failed financial institutions. Talking about limitation, one of the most major limitations is linked with contract conditions. Because bank is unable to sell a loan if a borrower didn't agree with that when making a contract. So for the bank, it's more beneficial to not to include this point in the contract at all. Another limitation is linked with the development of the commercial paper market, which also distracts some part of investors, especially medium and small size investors who cannot participate on loan sales market due to their size. So at the end of our presentation, I would like to mention again that loan sales nowadays is one of the most effective factors for risk transfer. So we assume that in the future, this market will continue to grow. Thank you for your attention. You're a great audience. We'd like to answer the whole question if you have some.